All right. Good morning, everyone. We are live. Liam is running a little late. He has an eight-track person that turned off his breaker, so he's trying to wait till his Wi-Fi gets back up. But we got Joe Farrell here. Strive for 20. What? Strive for? Oh yeah, Strive for 25. Lending for entrepreneurs. So, what's going on, man? It's been a while.
Yeah, it's going, man. It's going. Um, we're busy. We're busy. Lots of DSCR loans, lots of investors doing stuff, lots of crazy files. I was just telling some people, agents and my boss, that it just seems like every single file that we have going on is taking 10 to 15 days longer. Just something always pops up that just makes things more lengthy. But that's just the way it is. How about you, man?
All
What's
right.
new in your world?
Not much. Not much. Just I don't know. My some reason I can't see the chat going on the screen, but we'll figure it out. I see Frank's here, All Nighter Hider, Big Val, J6, the Butler Bruises here. I'll tell you about him. He's funny, man. But yeah, so we're gonna kind of maybe initially main topic we're gonna dig into is rates. So you are a lender. So people saw that the Fed cut rates the other day, and
Mm-hmm.
mortgage rates went up, and I think it may have shocked a lot of people that aren't really maybe in real estate to some extent, or follow that type of mortgage rates and the difference in interest rates, so they might have been confused, right? So maybe you can kind of touch on that, or maybe even explain why they're different in a sense, maybe.
Yeah, I mean, let's say that the Fed funds rate was directly correlated to your mortgage rates, which they're not, but let's just say that they were. So I had a client saying that, hey, well, I'm under contract, I want to lock in with you, but I want to wait and see what the markets do because, I think the rates are going to go down. And this is after the Fed funds rate cut. And I was like, well, we can see what happens. And, she just expected that rates would go down. And so if you take $100,000 loan and then let's just say that rates go down by a quarter percent. I mean, you're talking like a difference in payment of like $22, something like that. So it's not a huge difference in that type of a loan. I would say if it's a bigger loan, it's going to be a bigger difference. But the biggest mistake that people assume is is that the markets don't already price these things in. The markets know these things and they're already pricing these things in advance. And we saw the same thing last year in 2024 when the Fed funds rate was cut in September before the election. Mortgage rates in the 10-year Treasury shot up. I mean, we were at 3.6%, and then they announced the cut, and then the bond yields for the 10-year Treasury went to like 4.6, 4.7 within weeks, months, and mortgage rates went up. So these things are already priced in advance once the markets know what to expect. And then at the same time, the Fed funds rate is the intraday banking rate between banks. So I mean, you're talking short-term rates versus 10-year Treasury, mortgage rates, long-term rates. So the different parts of the yield curve. So the biggest thing is that yeah, there is a correlation, but it's not strong, and these things are already priced in.
Very good breakdown. Liam, thanks for joining. I let everyone know that you're just getting your Wi-Fi back up, but thanks for joining us. Jasic is here. He says, "What's up, Liam?" I know
Hey,
you've
J-Sec.
you've met Jasic. We have fun with him of all the trouble
Hmm.
he caused in Pittsburgh. So hopefully we'll be invited back, or the group will be invited back after
Oh, definitely.
Jasic ran amok up there. But Liam, quickly, maybe Joe kind of touched on. They were touching on how the Fed cut rates, mortgage rates slightly went up. But how is the rates, or Fed cutting rates? Is there more demand on your guys' side? Is business picking up in Pittsburgh?
Yeah, it's helping more deals pencil right now. Like buyers are getting a little bit more excited with the better rates. It's kind of been happening the past couple weeks though. Like Joel said, even before the actual rate cut came, because like you said, those things are kind of priced in with the expectations people have. Um, so yeah, people are getting a little bit better rates on some of these buys, uh, and kind of framing it as like, okay, now they've been a lot lower than they have been the past couple of years, so now is probably a good time to go if you're going to do something. So we're definitely seeing a little bit more. I'm seeing a little bit more of that now. Yeah.
Hyder quickly has a question though. He says, "Am I wrong? Mortgage rates are Fed funds plus a risk premium for the loan, so Fed funds plus around 1 to 2% given the borrower."
Yeah, there's a certain spread there. For my understanding, is there's a certain spread between the Fed funds rate and then what lenders are actually lending out on. So in times of higher uncertainty, higher economic uncertainty, that spread might be a little bit higher, but you know, over time it will stabilize to where it has. Yeah, I think that 1.2 to 1.5 uh, spread. I think in previous years it's been a little bit higher. I mean, Joel's probably the expert on this, but that spread has been a little bit higher on the rates, which is another reason the rates were a little bit higher. But you know, over time, hopefully we see that stabilize to where it's been previously, and that'll help rates come down a little bit as well.
And I think we just talked about it, Joe. Also, you're saying business is picking up for you, right? Things are getting busy. When it's this time of year too, usually I would think things are slowing down typically, right? This time of year for
Yeah.
investors. So it's kind of, you think just a lot of people were sitting on the sidelines these past few years, and now interest is picking up again.
Yeah, I mean, I think there's been a lot of people sitting on the sidelines. You know, the idea of rate cuts has been something that people have been talking about for a long time. And I hate to say the cliche, but marry the house, date the rate. That cliche that's been thrown out there for 3 years now. Rates, we had a rate cut last year before the election, as I mentioned, and mortgage rates have been roughly flat over the last 12 months. We had a rate cut last week. Mortgage rates are actually higher than they were the previous week. So I think people on the sidelines are just getting to the point where, hey, I don't know what's going to happen. It's just time to rip the band-aid off and go make a move. I mean, there's so many people that I'm talking to that have been waiting and waiting and waiting, and they have life events. They want to be able to buy a bigger house with more space for their growing family, and various things like that, that people are just saying, okay, I'm gonna go make things happen in this market. And then, again, inventory is low, historically low, and inventory is higher than it was last year, but still on the grand scheme of things. And Liam, you can probably attest to this in your area, but there's not a lot to pick from, but still people are out there hunting for deals, and you know, finding scenarios that can fit in. And I have more people doing renovation loans than I've ever seen. People looking at a home, hey, this isn't exactly what I want. However, I can make some adjustments, make it into my dream home, and finance it.
Quickly, I just want to, they're coming in from your channel, I believe, Joe. I think I could be saying it wrong, but sorry, but it could be Shofai. But it says, I am 18. I already gave up. I am not playing the rig game, working hard. Loyalty is BS. I decided to be an assistant manager in a charity shop and do what I needed to do. What do you think, you Gen Z giving up? What do you, is he asking about?
I
Is
get the
Gen Z giving
sentiment.
up on home ownership?
Yeah.
I get the sentiment. I feel like a lot of people in my generation and below are kind of feeling like, there's all this hard work nowadays, but they're kind of already behind the eight ball with, housing costs, and the cost of living is already so expensive. It's hard to get in the game, harder to get in the game now than it was. Wages haven't really gone up historically. So I think a lot of people are probably feeling that in that younger generation. Yeah, it's not as easy as it used to be, but there's still opportunities out there for people who are willing to make some sacrifices and play the long game over a 5 or 10 year period. So, I mean, I would just say try to house hack. It depends where you're located to see if that's even an option. But there's things you can do nowadays to get ahead. I think you just have to do more than what was previously required to get to that financial independence place that you want to be. So you kind of have to go a different route. Like when I started, it was side hustles. It was like, house hacking. Like that's how that's how I kind of measured up to, got things going for myself and headed in that direction. But you do have to go a little bit more above and beyond than you previously had to, in my opinion.
Yeah, Shofai, if you're still here, I would definitely, like Liam touched on, house hacking is a great way to try to get started. So if you're not familiar with that term, maybe chat GPT it, or reach out to an investor or even a lender like Joel or an agent like Liam, and kind of trying to figure out what house hacking may be. But All Nighter Hider does say, boo giving up. Yeah, learn the process and then figure out how to play. So, try to keep positive, stay positive, but and figure out or get around these type of communities, right? People that are doing it. We're all not doing exactly the same thing, but we're all kind of heading in the same direction. So just kind of figure out how the game is played and get on that pathway, right?
Hey, Mark, I
Yes.
want to throw a couple examples into that question. So this gentleman, Shofi, 18 years old, talking about potentially buying a house in the future, and Gen Z giving up on the notion. Me personally, in my day job, I've had a few 19, 20-year olds come to me wanting to be able to purchase a home, and a couple of them were not ready, didn't have any credit at all, nothing in their name. So that's a hurdle to overcome. You need to be able to have credit or have some kind of auxiliary types of credit that you can document, things like car insurance, things like rent. A couple of people had nothing, so they have some work to do. And a couple other people they were ready. They had credit scores, they had trade lines, they had job history in school, and they're able to buy a house at 19. And what I thought was interesting is that, if you're 20, 22, 24, 25, 26, in that range, most of your peers are probably renting. So you're naturally going to have a big demand or opportunity to be able to put in renters, rent by the room or rent the house with you, and then help subsidize the cost of your mortgage, house hacking, so to speak. But the people that are coming to me, and this is just my own personal lane, but the people that are coming to me or I'm getting connected to that are 19, 20, 21, these are people not in major cities, people more in the outskirts. And these are younger kids that are looking to build a family. They're married or engaged, they have kids in the way, and they're trying to stabilize and build a house for the family. And they're not trying to house hack or build a portfolio. So I just think it's unique that depending on someone's journey, where they are, where they want to be, um, not everybody wants to house hack, but it's still a major opportunity to be able to subsidize your housing costs and also stack properties over a period of time and build your portfolio.
Yeah, Shofi, I do see you saying here. I think you're coming from Joel's channel, like I said, but so I can't reply to you in the chat. But it does say, I am from London. By the way, 150K is still nothing here. I will never be able to buy a house. I'm not sure what type of lending, what they offer in London, and if house hacking is an option, but that is definitely a great way to get started. And unfortunately, Jeremy Taggart, who was here live streaming with me yesterday, who's also in Pittsburgh, he's a 7-time house hacker, I believe. So that's definitely a way how he's built up his wealth and kind of got himself out of the rat race. But definitely, if you're 18, like you said, hopefully you don't have any consumer debt yet. Try to stay out of the consumer debt. Just figure out how to put money aside, invest. But right now, probably the easiest time, considering that you hopefully don't have a lot of not requirements, but a lot of obligations in a sense, right? I mean, I'm not sure you could have a child or a family, but at that age, hopefully, a lot of times people aren't married yet and they don't have kids, so definitely you have a lot of opportunities at that time. Let's see. There was, well, before I get into the question, we can dig into some more about what we're talking about, like rates. I don't know if Zuber was talking about it today. I forgot who he was referring to, but they were talking about seeing rates under 6 in 2026. But I think according to that report, he was saying that was in Q4. But Zuber was kind of saying in just his he wouldn't be surprised if it was Q1 or Q2 seeing rates under 6. But you have any kind of thoughts on that, Joel?
Yeah, I do. And the bond market's up the last few days from the Fed meeting last week, but I actually locked in a conventional loan at 5.875, paying some points to get there, but good credit, 30-year fixed. So those rates are available. Again, that was last week on Tuesday, but we're not that far away. And then if you're talking about FHA or VA loans, which is a government-backed loan, those rates are going to be typically a little bit lower than a conventional loan. So FHA, VA, USDA, there's opportunities to get those rates into the mid fives if you're paying points. And I'm seeing a lot of that because sellers are offering more concessions to be able to close deals. So rates are already there-ish. So if they get lower next year, that means maybe low fives if you really want to get aggressive if sellers are paying concessions.
Dang, I can't. I don't know what's going on. I can't reply on the chats. But anyways, sorry, man, I lost track. Liam, what do you think would happen if rates get under 6 in Pittsburgh, man?
Oh man, that would be great. I would love that. Uh, I mean, I think we'll just see more of these houses that have been sitting gobbled up. Like we have a little bit higher inventory here right now, but it's more so like I've said before, like the marginal deals are kind of sitting, but the good ones are going. Like there's still a lot of demand for those types of houses that are just, great houses in general. There's still some pent up demand. I'm even seeing that on some of my properties I have listed right now, two of which were flips. And I didn't really know what to expect with the flip market. Um, but like we've been getting good showings and good reception on those. One of them went quick, the other one's at a higher price point. So that's going to naturally sit a little bit longer. Um, but I think that'd be a good place to be, like the high fives to low sixes. I don't think that's low enough to really like start a frenzy. Um, but I think that'd be at the point where it's like a good healthy market and things are moving along, things are penciling more. Um, so I'm looking forward to that if it does end up happening in 2026.
Was that your flip you listed? I thought it was when I first saw it. I saw Gangster Street.
Yeah, that one.
Is that your?
No, that's a client's
Oh, okay.
duplex. So we listed a couple for one seller. Um, just the other day, Jeremy and I had a couple listings for him. And then the one flip was a client's flip that I sold him on the front end from a wholesale deal I sourced, and Omar did the rehab, and then they got it listed. That's on Coral Street. Uh,
Okay. Yeah.
I'm doing a flip right now personally that should be done like later this week, and that should be getting listed like next week. So we can, we'll go over that at some point once it sells.
Yeah, yeah, definitely. Yeah, but I was just funny because when I saw that one that you listed, I thought it said Gangster Street at
Yeah.
first. So all of us, the little Pittsburgh chat we have was
When I
just
saw it, I
cracking up.
thought it was Gangster Street too, but it's Ganster.
Yeah, but it looks good. Yeah, but and Omar is killing it. I saw he's definitely trying to get that podcast going too. So I got to get him
Yeah,
back
he's
on
staying
here.
consistent with it. He's doing good. Yep.
Hey, Casey's tuning in. But I do see people tuning in from Joe's channel. So I just want to remind you folks, come to my channel and subscribe, and then you can go back to Joel's channel also. But Showfighter does say, appreciate it, man. I don't have no debt. I didn't go to university because I didn't know what to do. Maybe a wrong decision, but I don't want any debt. No, that's a very smart decision, definitely.
He's young. He's got a ton of time in front of him. If you want to go back to university or in a couple of years or whatever, you can do that. But taking some time when you're younger nowadays, I feel like is smart. Like think about what you want, think about what you're willing to do to get there, and then make like a good educated decision about what steps to take to get there. But he's got all the time in the world on his hand, and he's already, if he's in chats like this and watching videos like this, he's already on a good track, thinking about the right things, in my opinion. So
Yeah, I see Casey tuning in. He actually messaged on the side. He text messaged me yesterday, last night or whatever. So Joe, I don't know, maybe he asked me, what did he ask me? He asked me, oh, so what are you seeing on DSCR rates right now on refis? Is that what he asked me? Yeah. What do you see on DSCR refi rate recently?
Yeah, I mean, depending on the scenario, I mean, we have the best case scenarios are going to be in the mid sixes. So if you're under 75% loan to value, got good credit, got the DSCR ratio above 1.1, I mean, you're talking about mid sixes in all reality.
I do have a question for you because I'm not sure if he's in here still yet, but Val was working on a refi. Do all DSCR lenders require I'm sure it's not all, but a lease in place when they're refining for a DSCR? So like he's trying to
Yeah.
finalize, and then the lender was saying, hey, we need a lease in place to proceed or whatnot.
It depends on the situation. Are they experienced? Are they not experienced? What's the LTV? Is it a purchase? Is it a refi? I mean, because we're going to do a rent schedule anyway, where the appraiser's going to go out and compare market rents and document that and give us a number. And so if you don't have a lease, typically that's not that big of a deal. We'll just base it off of the market rents, but it depends on the situation. And also same thing as a lender. I mean, I work for New American Funding, so we're a mortgage company. We're not a broker. We're not a bank. And so I've got probably 7, 8 different investors that I can choose to place a loan with. So it just depends on who you're talking to and which company they're going through. There's different options you can look at that may or may not need a lease depending on the details.
Yeah, so so like Val has, like you said, the appraiser went out, they got the rents, but the lender saying, oh, we need a lease in place. So it does vary. It probably depends who you're working with. Um, KC, reach out to Joe and maybe he can help you more specifically. But KC's saying 50% loan to value, 980K balance, 780 credit, no point possible.
What was the last thing you said? No point?
Yeah,
No
no,
points?
probably no, not paying for points, probably.
Okay.
And just Irish Paul tuning in from Joel's channel does say short answer, 6 6s.
Yeah, I mean, I've got somebody right now that they want to put 20% down, and it's a property that's barely cash flowing, but they're going to put money into it. It's a good deal, I guess, on paper. And so when you're at 20% down or 80% LTV, yeah, DSCR not strong. This person's credit scores were like 720. I mean, they were in the mid sevens. So I mean, best case scenario, you're going to be in the sixes. If it's a tighter deal, you're talking sevens. Mark, who was the one that was asking about the 50% LTV scenario?
KC.
Casey. Okay.
Yeah, but he lives in that California place, so I don't know,
Yeah.
but
Yeah.
but yeah, so he says 980K balance, 780 credit. Yeah, no point possible. But while Joel's working on that, Liam, like we're bringing up the Pittsburgh event, talking about rates possibly coming down. I think a lot of the people that went to the Pittsburgh in-person meetup really liked what they saw.
Good.
Like Jason came from Jersey, Elena also, and like Elena was very positive on Pittsburgh. She feels like I was talking about yesterday. She feels so much almost like energy for
Yeah.
such a low cost of living area in a
Yep.
sense,
I
not
would
like
agree.
some other areas where you go into and you just kind of get that dreariness.
Yes.
So that was her take on it. Also, I think what a lot of people mentioned though was the hills, and maybe people don't realize that, and I think you touched on it, so maybe you can touch on that also, on why that might restrict a lot of new development in maybe Pittsburgh.
Yeah, it's just hard to build with the terrain that we have. We have a lot of like cut through streets. Some properties like that get listed. I'm just like, it might be a good property, but it's hanging off the side of a cliff. So it's like, I probably don't want that one, so yeah, it's just hilly terrain. But I think people need to, and I'm probably a little bit biased because I'm not a developer. Like, there's definitely opportunities out there, but I would say on average, it's a little bit harder to find buildable lots here in the center of Pittsburgh or city center uh, than it would be elsewhere. So generally that might constrain a whole bunch of supply coming online, uh, which is good for long-term appreciation and rent growth and stuff. I think we're seeing more appreciation a little bit outside the city, 15, 20, 30 minutes outside the city. uh, we're seeing a bit more development.
So Casey, if you are still there, Joe is asking, is it single family property or multifamily? How much are the rents? But
Hey, Mark, did you see my post from yesterday about construction for ADUs?
yeah, so that unfortunately that was the short that I was going to try and share here, but I haven't figured out I
Oh,
haven't figured out how to share it and the volume come through, because when we were testing it before we went live, I can share it, but the volume is only coming through my headset. So if anyone in that's tuning in, if you are a little more tech savvy than we are, let me know how I can share something and the audio is playing and not just through my headset. So I got to figure that out. But if not, go check out Joel's Instagram or his YouTube page. He had a short or reel recently, and he was talking about how to fund an ADU. So maybe you can touch on that real quick, Joel.
yeah. I mean, obviously, you're gonna have to make sure that the county and city, it's all good from a zoning perspective and any other regulations in your specific township. But and the scenario that I was presenting was a purchase. So this person was buying a single family home. They have a garage that's got an attic, a massive attic, and what they're going to do is they're going to renovate the attic and turn it into an ADU, put all the plumbing and all the things that you need to make it livable, and they're going to update and renovate the main structure as well. So they're putting 15% down, calling it an investment property. There is PMI, but we're going to do a renovation, build the renovations into the financing, and then you put it all together, have 6 months or a year to get it done. And then when all's all said and done, he's going to have 2 units to be able to rent out. And rather than having to mix and match and maybe do private money and hard money and high rates, you're just doing one loan, get it done, and rock and roll.
Yeah, so if you want more information on that, like I said, reach out to Joel, or like I said, check out his Instagram page. Go subscribe to one of his many YouTube channels. I think he's mainly focusing on the lending for entrepreneurs right now. But go check that out. Hey, Nick, lead pray huddle. Coach Massey's here. So yeah, Nick is kind of my Bitcoin specialist, I guess, who's kind of a regular on my channel. He still hasn't got back to me for live streaming this week, but I'm gonna put you out there, Nick. But I guess he has a game coming up to coach, so he doesn't know what his schedule is. But yeah, let's see. So what else are we talking about? The Pittsburgh rates coming down. Oh, I know Joel wanted to talk. So Leah, maybe you can touch on this, but Joel was kind of talking about how are people finding deals right now? Like in Pittsburgh, for example, how are people, are they finding working with wholesaler? Like, how are you guys finding deals right now?
Depends what you're looking for, but generally we're still seeing stuff on market. Like the fixer uppers, the wholesalers are helpful for those, for sure. Because there's just a lot of demand for those fixer upper deals that have a lot of like value on the back end of them. So if they are listed on the market, they tend to go crazy. So wholesalers are good for those more flip or burr properties. Like there's a couple wholesalers that I like here. Some of them aren't great, but there's a couple that I like here that are good for those types of properties when you're looking for those. And then, yeah, we're still seeing some good stuff on market, and like the kind of gap between buyer, buyer, what they're willing to pay, and sellers, like what they're expecting, has been bridged a little bit more now. So we're kind of seeing that become more of an opportunity, is like some of these deals that have been sitting, or, they're getting priced a little bit better initially when they hit the market. So we're still seeing stuff on market, at least here in Pittsburgh. We're lucky enough to have that. So, yeah.
You're going to say something, Joel?
Yeah, I was just going to ask, every market is different in terms of, price point, how much money you're going to pay to, upgrade a property. So your typical fix and flip, would you be able to walk through just the basic numbers?
Yeah. So
of an example?
So generally I like flips that are probably, I kind of go by ARV, because on the back end, if it's less than like 250K ARV, then it might be a better burr, because, if it's ARVing for 300, 350, 400, it kind of has to be a flip, because that DSCR, that rent to price ratio on the back end, won't work as well if you want to rent it and refi and rent. So I'd say like a ballpark flip, you could probably purchase for anywhere from 70 to 125, put like, 50 to 80 into it, and probably be worth like 300. Like 300 is like a good price point on the back end. I mean, ballpark, like that's ideal. And it depends on which neighborhoods.
Family, 3-bed, like 2-bath.
Yeah, basic house. And it depends on kind of which area. And sometimes you're paying a little bit more on the front end just to get into a nice neighborhood. So that purchase price might be 150, or like I have a client who just bought a house from a wholesaler for 200, and that's going to be a flip, but it's going to be worth like 450 on the back end. And he's a contractor, so he can do the rehab for a little bit less, which helped at pencil. And then like the one I'm doing, I paid a premium to get into a nice neighborhood. It was like 248 on the front end. So depending on the area, what the ARV is going to be on the back end, sometimes you're paying majority of the cost on the purchase price, but some others it's like, you can get them for 70K or whatever. And And in terms of margins, like that kind of 70% rule that everybody hears about, like it's in all the books and all the podcasts and stuff, like that's hard to find. Like margins have thinned out. Like we see stuff stabilize closer to like maybe even 80% sometimes. So when I'm looking at the flips, I just want to make sure it's in an area that like there's no deficiencies about the property itself. There's not a whole bunch of steps going up to the house. There's no captive bedrooms. The kitchen isn't real small, anything like that. And also that's in an area that generally has lower days on market. It'll move on the back end. Because if you have thinner margins, you just want to make sure you can move it on the back end and things are nice. But the 70% like purchase price plus rehab, 70% of ARV, it's hard to find, but they're out there, you know. I think if people are trying to do a lot of deals, they're not always going to hit that. But I think that's okay. You just have to take into account like how much risk is there in the rehab. Is like, do I need to more margin because there's this much more involved rehab where costs can kind of inflate once I get into it, or is it like straightforward rehab? I'll take a little bit less margin because it's like only a 3-month rehab and there's not much risk with the stuff that I'm doing there, and it's in good neighborhood, so it should sell quickly. That can justify a lower margin as well. So
Mark, did you have a question?
No. I was just gonna say I don't know if you saw Casey's response to you. He says single family home.
Yeah.
Yeah.
Yep.
Go ahead, man.
Well, I was gonna say there's a friend of mine here in St. Louis. His name's Leonard Anderson, and he's been in real estate. He's, been doing public speaking and doing all that stuff, and he's got his stuff all narrowed down so much that he has a very, singular type of flip he wants. It's a 3-bed, 2-bath with this thing and that thing, and it's just like if it doesn't hit this criteria, his buy box, he's not getting it. But everybody he knows what his buy box is, and they're giving him deals.
that's awesome.
And people that don't fit that, they go elsewhere. And so I guess you have to get to that kind of escape velocity where you can't be that picky, right? You have to build it up so where you build the resources and build the the experience that you can be that picky to let deals go by.
Yeah, I think in the beginning I try to talk people out of being super picky. Like they have to have the funds to work with first of all anyways. Like that the amount of funds you have available for down payment will dictate what kind of product you're actually going after. But I try to talk people out of being too picky when they're just starting their first or second flip. But once you've kind of are churning and burning, like I assume he's doing, I don't know, a couple a year, whatever, a whole bunch a year.
13 this year.
So that's great because he can just churn and burn. He's built up the actual business of the flipping. It's hard to do that right at the beginning. You can certainly, but you have to invest more.
It's taking years.
If you're trying to do like 13 a year, like you kind of have to source your own. Like I can't find 13 3-bedroom, 2-bath ranch style homes for someone to flip every single year. Like you kind of have to do some off market outreach. And there's some local guys here that have crushed it. And the way they did it just like that. They like 1960s or newer houses, 3-bed, 2-bath, ARV like 300,000, no more, no less. And they do off-market outreach to source those because there's just not enough inventory for like if you have your buy box that dialed in, it's hard to source that many deals on a annual basis just on market competing with everybody else. So it depends. When people are just getting started, I kind of say like, hey, let's find something with good numbers, something where you can get your feet wet, make a good profit, and then keep it moving, roll into the next one. And then over time, like I think taking action, getting the first 1 or 2 done is like the most important thing, and not losing your hat on it too,
Yeah, I think that's the very important takeaway is I think sometimes I know people have a buy box and whatnot, but sometimes people are a little too picky, I think, when they're first starting. And sometimes I don't want to say, stray from your buy box, but it's kind of, you got to get some deals under your belt to be able to get the pickier ones that you want in a sense.
Yeah, I think it's more important to have things that you definitely say no to rather than have a very, like, for example, foundation issues or weird quirks about a property. Like I hate a bunch of steps going up to a property. Like that's up to the front door. Like those things don't sell. Or wonky layouts. Like those are things I easily pass on. If they don't have that, I can talk myself into certain deals, but it's more like, yeah, if you have a super picky buy box right at the beginning, it's more the opportunity cost. Like, what are you passing up? Are you passing up on good deals just because it doesn't, perfectly fit within that one specific buy box that you had, but you haven't even tested? But it depends. Everybody's different too. And there is sometimes a justification for the exact buy box that they want. But I try to kind of, test that with them and help them work through that. And then if I see a deal that doesn't quite fit it, but it's close and it has this, or this, I can kind of make a case for why this one might make just as much sense versus, this other one or whatever.
Yeah. So
deals are just hard to find. So if you're, very specific on your buy box, you might be waiting a year or two to get a deal where you could have churned out like 2 or 3 of them by then if you were willing to move on a couple things here or there.
Oh, he's back. Hold on. Sorry. And then Craig's here. Craig's in Arizona, but he invests in Pittsburgh. But I will. Yeah, so I think you may have touched on, or Jeremy may have touched on it recently. But so Craig says it seems wholesalers are trying to sell for retail prices. They're not leaving a spread to make a profit in ARV. And then he goes on to say, I think the wholesalers have gotten very greedy and trying to keep the value add profit. So I think I talked about it too. I feel like the spreads are just so much smaller now. And so it's almost, I don't even know if wholesalers are bringing that great deals to the table. Like and I think you touched on it too, like just working with an agent, you have more, less risk, I guess, on the table, right? So what's your thought on what Craig was saying about the wholesalers and maybe being greedy and the spread?
I mean, I agree. Like some of the wholesalers, you'll still get like 8 offers on them. I think it depends on the wholesaler. Some of them are much better at pricing them out. Like I'll talk to this one guy, Dan, that we work a lot with very closely. And his numbers are actually accurate. If he puts on the website, ARV is this and rehab costs are this, like typically when I dive into that deal, they're pretty accurate for the most part, but some wholesalers are off on one of those 2 things. And their margins are way off. But if people don't know what they're doing and don't know how to do due diligence, they might end up doing that deal and getting, kind of screwed on it. But yeah, I mean, I think some of the wholesalers are just kind of listing things at retail price, and there's not as much margin to see on it. That's why I only like 2 or 3 wholesalers in this market.
Man, Joe, you got some haters coming from your channel, man. No, but
Alex looks like the expert. We should get him on here.
Yeah. Hey, man, Alex, try to do it live streaming, man, instead of just typing. But Casey said that, Joe. I did. Oh, so I guess Casey maybe didn't see your reply, Joe. I'm not sure. But yeah, I definitely feel like, wholesale, that the spreads are so small, like almost not even looking at anything they're sending. Like it's almost like I'd rather just see what you or Jeremy or Alex sends, and it's kind of at least you have that little more security of kind of working with an agent where you can get some inspections done and things like that, right? Let's see, any question? No, I see. Hey, Big Andy's tuning in. Morning from Ohio. So Andy, did you get to meet Andy, Liam? I know Andy attended, but he didn't get there till late Friday, I believe.
I don't know. So, I feel like I did meet everybody that night at that brewery.
Oh, I don't think he made it on Friday.
Okay. Then no, I probably didn't meet him then.
Okay. Yeah.
Hey, I'm sorry, just before I forget, Liam, what's the best place to follow you at? Instagram, YouTube?
I'm terrible at social media, but yeah, we are on Instagram. Mark can put it in the chat, but yeah, probably my Instagram or the team Instagram that we have.
Yeah.
For the Taggart team.
Yeah. Yeah, because there's a team Taggart.
I know I followed Jeremy, but I didn't realize there was a team one.
Yeah, and we were talking. Liam was on his honeymoon, or he was traveling recently, so he's been out. Let's
All right,
see.
cool. Just followed you.
Yeah,
Cool.
there's Team Taggart, Joel's YouTube channel. Like I said, go check them out.
Perfect.
Subscribe. Let's see. And then Joel also, I kind of skipped over that topic you sent me, but Joel kind of want to, maybe quickly we can dig into thoughts on, like, if you're not buying real estate, are you what was the way you termed it? Setting your family up for failure in a sense, or shoot, where did the question go you sent me?
Oh yeah, well, I forget how I worded it.
But while I look for it, somebody put in the comments 6'7". I don't know how to explain it, but I just know it's a term going around right now, but I have no
Some
idea.
meme with like
Yeah,
Gen Alpha or something like that.
exactly. I saw it in the chat, but I was like, I've seen it, I heard it, but I have no idea what it refers to.
Yeah, it started popping up in my feed, so I did a little bit of a rabbit hole on while waiting for my plane from Austin over the weekend, and it started with like a 6'7", like a meme talking about a basketball player who is, I think they're talking about Lonzo Ball's younger brother. What's the youngest brother's name from that plays for Charlotte?
LaMelo.
LaMelo. He's 6'7", but moves like he's 6'2", and then that 6'7" became just a thing. So one of the guys I saw said, "Hey, what? Chicken butt?" It's the same thing. You're just trolling people. 6'7", it means literally nothing. Just 6'7", and then they do this thing like this. It literally means nothing.
Yeah, I've been seeing it all over the place, and I have no idea what it refers to. You said if you don't own real estate, your lineage is doomed.
Yeah, if you don't own assets in general, it'd be crypto, stocks, real estate. Yeah, you got to own
Is
something.
that what you're thinking about recently, or is that?
Yeah. But, I mean, it just goes back to the past 5-6 years where you have, I think a third of the money that's in circulation right now was printed from COVID. So the massive inflation, which only helps out the people who own assets, the people that are in the middle class are getting wiped out. So if you roll the clock forward with AI and job loss and wealth flowing up to the top, couple percent, if you're not scratching and clawing to own something today, then you're never going to get there. You gotta start planting seeds today, because we talk about this all the time, right? The first 5 years of suck. You may not see the fruits of your labor in gains, or whether it be in real estate or something else in terms of the wealth creation. But if you don't get into the game now, you're going to get left behind massively. So you got to get into the game. You got to buy some assets. You got to scratch and claw, live with your parents as long as you can, save up lots of money, and go buy things. Go buy assets.
Well, before we let Liam answer this, someone from your channel, Yeah, does say though, I don't give an F about my lineage. We're all trying to survive. So when someone comes at you from that avenue, kind of how would you, maybe address that or help them, like you're saying, plant the seeds?
Well, I mean, I think if you're trying to survive, right, that's the tip of the iceberg, right? Like you're trying to scratch and claw to survive, and the idea of, hey, I owe grandma, grandpa, uncle $500. I'm gonna work in extra overtime to pay them back. Once you've paid them back, that same initiative, that desire, that urgency, that fire to work hard to pay them back, now that urgency is gone, right? You paid them back. Now what? That's the question that I've seen in myself. I've seen in so many people. Once you get back to even, then what do? The people that are getting ahead are the ones that keep on going and keep putting the habits in place and keep working hard to get ahead and save money. And so once you scratch and claw to be able to pay your bills and start to save, that's when you're gonna start to fall forward instead of falling backwards. So that's the fork on the road. Do you keep on going, or do you fall back to your old ways?
All right, so Liam, maybe before you dig into this topic, Jacek does have a question for you though. It says, Liam, what's your thoughts about Greece real estate? In my opinion, Athens looks worse than Pittsburgh real estate is bad there.
Yeah, I mean, I was there for like a day and a half, but most of the city's pretty run down. It's weird because there's ruins from like thousands of years ago, and then everything else was built in like the 1800s. There's like nothing in between in Athens. That's kind of what our tour guide was mentioning as well. I mean, the hotels are sick. I think if you're going to invest there, probably some cool boutique hotel would be a good way to go. But other than that, I don't know. But yeah, Pittsburgh's way nicer, to be honest.
So like,
If I'm going to Greece, I'll probably skip Athens next time. But the Acropolis is just cool. Just that's worth seeing. But the city itself, not so much.
so like you, right? You're newly married, I believe. No kids, right, yet. And
Mm-hmm.
so talking about like Joe's point of planting seeds, lineage, when like how do you guys have this discussion, you and your wife, or how are you approaching this?
Yeah, for sure. I think it's just a frame of mind. I've more of an abundance mindset, and I think some people don't, and that's fine. But I want to work hard and make sacrifices now so we can live a better life in the future. Um, Kind of what that person said originally, the Shoki, who was in London and 19 and kind of feeling like he can't get ahead. I think a greater percentage of the population is feeling like that because of like structural things going on in the world and economy and stuff. But I choose not to focus on that. I try to, you do have to work harder now to get where you want to go, but that's just the choice that I make on a daily basis. But my wife and I are aligned on that. Everybody who I am around is aligned on that. I try not to be around downers or people who aren't, living with an abundance mindset and optimistic about the future or whatever. But that's kind of my take on it.
Yeah, so Natuya, following up from Joe's channel, says, "I wish I lived in America. You can't make no wealth here in Australia unless you own property. Ain't diversified enough." So yeah, definitely. As much as I'm everywhere. I'm sure has their problems or issues, and as much problems America has and whatnot. I still think there's so much opportunities here, right? If you put in the work and sacrifice, and it's not easy, definitely not. But like I think Joe, you may have touched on earlier. Yes, the wealth gap is getting bigger, but it's also because more people are becoming millionaires, right? So if you look at it that way, the opportunities are there, right? So the gap, the middle class is shrinking, but you can either go one way or the other, right? You can fall below the middle class, or you can go into the upper class, the millionaire side. So it is widening, but there is opportunities, and like I said, as much problems as we have in our own country, but there's still a lot of opportunities, and I don't think there's any other place I'd want to be if having opportunities to build wealth, right? I mean, that's my kind of take on it.
One thing I want to throw in, I was at a Walmart here in St. Louis, in an area of St. Louis that's not high, socioeconomically high class. It's probably middle to lower class, if you'd say. And these teenagers were just regular associates at Walmart, and I just happened to strike up a conversation, and you know, it got into, yeah, all I think about is making money. All I think about is finance. And these kids are 19 years old, and all they can think about is dollars and cents. And they're making an average wage, but they both had YouTube channels, and they both were on TikTok creating content, and they had followers, and that's the stuff that they were thinking about, and they were associating with people that were like-minded, because not everybody around them was thinking like that, but they were, and they were wanting to be around people who thought like them and wanted to be able to create things, whether it's content or business or whatever it is. And so I think it's just so important. It doesn't matter what age you are. I mean, me and Mark are pushing 60 over here, and we're friends. But we're friends because of content. You know, Mark's closer than I am, by the way. But
I use
um,
friends loosely. I use that term loosely with you.
uh, but just finding people that think like you. I mean, like Liam, you mentioned, hard work, but part of the game too is turning the work into fun. And you can do that when you have people that think like you, and turning the fun and turning the work into fun. That's next level shit right there.
100%.
Yeah, I mean, to that point, like you said, I mean, I was just joking, but yeah, I consider you guys friends, and no, I mean, I think that's part of it too, right? Is surrounding yourself with the right people that's aligned with the same direct. I mean, we're not saying everyone is doing real estate and what we're doing. We're not saying everyone is doing Bitcoin or everyone's doing like short-term rentals or flips, but everyone's kind of headed in that same direction and mindset. And it's also who you can align with and have fun with. And that's why, me and Joe always have a good time. We always giving each other a hard time. And I feel like I can make fun of Liam, and he's not, he's not going to take it personal. Even Jeremy, right? You know, playing in the fantasy football leagues with them and whatever, right? But it's building that type of relationships. But I did want to, Natu, yeah, that did kind of follow. I'm not sure if he's saying, is he asking a question? Is it true America's middle class have a lot of potential for growth? Or is he saying it is true America has? So let's say he's asking a question. Do you guys think the middle class has a lot of potential for growth in America? Joel?
I mean, I think you're talking about potential, and yes, it's possible, but what do you actually believe? Do you believe that it's possible? I think that's the line in the sand. And you may not believe it today, but it doesn't mean you can't believe it tomorrow. But I think the belief that it's possible is the most important thing. It's possible for anybody as long as you believe and put the work in long enough and get to the right, make the right connections and get around the right people that push you. So I think it's all about belief at that point.
Yeah, I agree. I think getting around the bright people, like the whole you're the average of the 5 people you spend the most time with, is so true. I think at the beginning, like that was the biggest thing for me, getting around people who were like directionally aligned, and then also just consuming as much like business books or podcasts or whatever as possible. If you don't have those people around you currently in your social circle, read the books, listen to the podcasts where you can kind of form that group of 5 people where you can, that you're directionally aligned with.
100%.
Let's see. So let me dig into this real quick then. In 20 to 30 years, do you think the wealth gap between owners and non-owners will get even wider? Liam?
Seems to be trending that direction. And there's really no indication that they're going to make a meaningful change to, reverse that. So, basic pattern recognition says that's probably going to keep getting worse and worse. But it's hard to say because there's a lot of changes going on in the world economy. Like, who knows? Maybe we hit some massive GDP expansion with the whole AI and tech stuff. Who knows? A lot of stuff could change. But right now, it seems to be, if you look at the graph, it's trending that way.
Joel, you have any thoughts on that?
I'm sorry, I didn't catch the full question. My apologies.
In 20 to 30 years, do you think
20,
the
30
wealth
years.
gap between owners and non-owners will get even wider?
I mean, yeah. You roll the clock forward based on the current trajectory. I don't think there's any way it wouldn't.
And I feel part of it too is maybe it's just social media or what, but I just feel more people are finding socialism as the solution. I don't know. It just seems like that's the push or everyone's answer to things, and it just seems that's what a lot of people are hoping for or wanting. So,
Do we get into the UN speech from yesterday?
dude, we can do that on your channel next time. But
I mean,
yeah.
but you bring up the whole socialism part of it, right? I mean, like, there's a lot of forces that are pushing that way, and then there are a couple that are trying to push against it.
Hold on. Late start wealth. What's up, man? It says, good morning, everyone. You refer to middle class, but what does that mean? How much impact does location or state you live in matter? Ooh, great question, late start wealth. Joel, you want to touch on that first?
Yeah, I mean, Ty Lopez talks about geography quite a bit. You take an American wage and you go into certain countries like the Philippines or certain places in South America or Asia, your dollar goes a long way. You can live like a king with the same amount of income and work remotely, right? So that's just one little sliver of an example. But talking about from state to state, depending on what you do, I'll give you an example just of me personally. I live in St. Louis, Missouri. I got into mortgage in 2006 working at a big bank. And along the way in my journey, I started doing a lot of VA loans and working with veterans. And with limited resources, limited time, I decided that I was going to go try to find clientele. There was a lot of military clients, and it just happened to be the DC market, and it also happens to be high dollar real estate. So from a commission job, I was in St. Louis and I was building relationships in Maryland and Virginia and DC, where it just happens to be a lot of military clientele and a lot higher prices and higher loans. So the same work and then commission job, I can make more money because the loan balances are higher. And that's how I really planted the seeds for my business in 2012 and 2013. So me personally, I was able to tap into an arbitrage opportunity in my marketplace. And that's just one industry in mortgage, and there's probably a million other examples out there. But yeah, I think state to state, working remotely, online, there's a lot of ways that you can tap into that. And then at the same time, from a real estate standpoint, people that work remotely, you're a free agent. You could buy a primary residence anywhere you want. And if I were 25 years old and I worked remotely and had a good job and had confidence in my job to be able to generate income, I'm going to find areas where there's a lot of multifamily properties, buy one as a primary residence, buy a quadplex, live in one unit, rent out the others, and rinse and repeat, and just stair step my way up. That's what I would do.
Yeah, definitely. Liam, before you dig into that, and I think we kind of touched on it, the Pittsburgh in-person meetup. A lot of you may know Mikey, who's in Hawaii, who invests in Pittsburgh also. But for him, like, yeah, he loved it. He loved Pittsburgh. He definitely considering moving there. Part of it is also cost of living. Part of it is he sees more opportunities, like Joel touched on. Find some place where there's multi-families. Mikey could go and house hack there. So he's definitely considering, leaving what you would call paradise, right, in Hawaii to go live in Pittsburgh. Definitely he'd have to get.
What?
Well, I mean,
Maybe.
no, he has to get the wife on board, but
Okay.
from what he saw and his experience in Pittsburgh, he's like, oh yeah, I love this. Like, this place is awesome, But of course, he's just whatever a week, right? But just from his initial interaction there, he was like, oh, this place is great. But yeah, Liam, what's your
Until
thought?
it's
Because you live
December.
in it. I was gonna make a joke. You said St. Louis. I thought it was St. Louis, Missouri, though. You always say is where
Yeah.
you live. But Liam, you like, same thing. You live in an affordable market, right? But so what's your thought on, and people refer to the middle class, and what does that mean, and how much
I,
impact does location or state you live in matter?
personally, I think it makes a huge difference what city you're living in. Like, listen, when I started, like, graduated college, I would have loved to move to New York. Like, I love that city. I'm there a couple times a year. That's where my family's from. But I made the decision to be in Pittsburgh because I saw it as a better city to build a financial foundation throughout my 20s. So I sacrificed lifestyle and living in, like, New York City or whatever, some very high cost of living area, because I wanted to build a financial foundation, and this was a good place to do it because the cost of living is so low and real estate's cheap and stuff. So I think it makes a massive difference. Like, if you're, that first guy who said he's in London, you can't house hack in London. I mean, it's hard to buy a property for cheap in London. So, I mean, like, I have family who lives just south of London. Actually, we saw them when we went there for my honeymoon. And my cousin just bought a house out there, and his sister, my other cousin, is in Manchester, and she was able to buy a flat out there. So sometimes it does involve, I mean, moving to a place where maybe there's more opportunity for you. Maybe you're better suited to kind of get on the wealth journey. Because if you're in an area that just you're scraping by, or it's not as easy to get started because you're kind of constrained by the cost of living, then it depends what sacrifices you want to make to get on that path. But personally, like, that's why I ended up in Pittsburgh and why I've been here for so long.
Yeah, Hyder brings up a great point. He says a middle class is not a historic norm. Have and have nots is the historic norm, unfortunately. But I live in Hawaii, definitely a high cost of living area. Probably not the best job opportunities out here. Definitely high real estate prices. So I definitely advise young people, man, if you have the opportunity, I would go away and try to accumulate wealth in a more affordable market, and then you can always bring that wealth back home to try and get something. And that's part of the dilemma. A lot of people that maybe didn't grow up in Hawaii are buying real estate here, but that's because they built their wealth in these other areas, and then they built up wealth, and now they're in the retirement age, and now they have all this assets saved up, and they come to Hawaii and buy real estate, right? And then the people, local people here are like, oh, these people coming to buy up real estate. But it's like, you can do the same thing, right? When you're younger, you go away. Maybe it takes 10 years to build up some wealth in St. Louis or Pittsburgh, right? And now you have all this wealth, and then you can come back and buy something here, or even rent, because rent is way cheaper than buying something here. But a lot of people just get in that grind, and I see them, doing 40, 50 years in Hawaii and just working 2 jobs, 3 jobs, and then how much are they actually getting to enjoy paradise out here, right? So a lot of people, Vegas is not cheap. It's cheaper than Hawaii, but a lot of people from Hawaii are moving to Vegas now, and that's like the kind of the next location for them. I think I just talked to like 3 people that are moving it to Vegas, just because they've said they can't get ahead here. They're working 2 jobs already, right? And it's just hard for them to get ahead. Yeah, it's a great episode. I don't know if there's anything else you want to dig into. I don't know if you guys, I saw this reel that I'm gonna try and get a live stream together for it, but I thought it was super interesting. I forgot who it was, but they were talking about allowance for kids, and he was saying he's not gonna pay his kid an allowance. I think just like set things that the kid has to do, but it's more like, I want my child to find opportunities, and then we negotiate. So like, you find what you could provide value, like whether it's, maybe there's 4 rooms in the house. If you feel that vacuuming is a valuable job to get done, now you present to me how much you think it's worth, and then we can negotiate from there, right? Like if my son comes to me and says, I'll do these rooms for $10, and you're like, no, that's not worth $10. How about $4 or something, right? But he wants his son to find things where he can provide value, and now let's negotiate, right? So he's trying to teach him that business skill of finding how you can provide a service to someone, and now you got to figure out what it's worth to someone. So I don't know, you guys have any thoughts on that real quick?
I kind of like that. Yeah, I never had an allowance growing up. So I was kind of just always finding things to do to get paid, not from my parents necessarily, but I like that idea because you're kind of instilling financial sense and hard work and business sense into them at a young age. So there's probably a lot of different ways to do that, but I like that one.
Joel, what about you? Because you have your kids are 8 now?
No,
Your twin?
they just turned 6.
6 only.
Yep. So allowance.
You're
We're
gonna be
not
like
there,
70 when they graduate. No, and I'm just
bro, and you'll be 80. So what's your point?
no. Okay, sorry, man.
I'll send you the invite. No, but I love the idea of creating value, solving a problem, doing those kinds of things outside of the normal housing, housework, whether it be cleaning up your dishes, take out the trash, other stuff outside that, spending time on creating things. I think that's huge, and that's something that we are currently working on. So
Yeah, I definitely I like that part about kind of negotiating though. You find what you think provides value, and you tell me your price, and now we'll we'll see if I think it's worth paying that price, right? Because I'm sure my son's gonna come to me like, this is $50 worth to whatever, cut the grass or something, right? And well, we'll see what we can negotiate. But that's life, right? It's all about negotiating skills and finding value and what you can provide. But yeah, everyone, hey, I see C-Web tuning in. Hey, you're in Arizona. How come you're still on vacation, or when did you go on vacation? But yes, I'm surprised no one commented. I was able to luckily wear my Bears hat this week because they performed very well. So I'm surprised Joe V didn't talk shit to me. Chris will probably say something soon. But Liam, how'd you do fantasy this week? I don't even know which team is yours.
I'm 3-0 right now. It's crazy. I've never done fantasy football before either, but I'm off to a good start. So me and Jeremy's wife Caitlin are the only teams 3-0 right now.
Oh, it must be driving Jeremy nuts because I just beat him. I reminded him that he hasn't beat me in fantasy football yet. So I know
I haven't shit talk him at all yet, but it's coming.
Oh, he's like, oh man, my team's always hurt when I play you and all this excuse. Man.
Yeah, it's been fun though. I like it for sure.
Yeah.
There's a stat that I pulled up earlier that I didn't get to, but the number of existing homes sold in 2024 was $4.0 million. 23 was 4.09. 22 was 5.03. 21 it was 6 million, and then going back to pre-COVID 5.3, 5.3. I mean, the number of homes being sold is 20% below kind of the historic norm. I mean, I know that I'm feeling that in my industry. In talking to Jeremy, I think you guys are still continuing to have growth in the number of volume and transactions. But I mean, what are you seeing overall, just in general, Liam?
Yeah, we just have a unique client base with all investors, so it's a little bit different. Like we still have good demand, and we're still doing a lot of transactions, but in the market as a whole, yeah, I think there's less deals getting done in general, and we're seeing that. We're just seeing houses sitting longer. We're seeing less transactions happen, but our client base just happens to be mostly investors, and they're always pretty active. Yeah.
Yeah, so great point, Joel. And if people, I think I know a lot of my audience probably knows this already, but they follow Michael Zuber's daily financial news, and he's been talking about it for a while. Like, 2025 is going to probably be the bottom, or we're hitting the bottom as far as transactions. So he's been calling it for a while, and I want to say, it, he talked about it this morning, but I want to say it was 1995, maybe. This is the lowest sales, maybe like the past 30 years. So transaction wise, so definitely we are at the bottom. But as you see, for many markets, prices haven't come down significantly. There is some market prices have dipped, but transactions definitely have hit a bottom. But yeah, with rates possibly softening, I think there's gonna be a lot of opportunities out there. Ave, yes, 85 Bears. Best I see. Yeah. Why did you tune in so late? Yes, quarterback has always been a problem. I do like Caleb Williams. I just wish he wouldn't be painting his nails right now until he started winning, so that he can't take flack for that. But definitely, let's win some games first before we draw attention to ourselves that way. Anything you guys want to wrap things up with? Joel, what are you working on? When are you going to go live next? When can they find you?
Well, I had one reel go off on YouTube that had a little clip of the talking heads going back to Mark's prime, back when he was a teenager in the late 70s. That went off, and it's over 200,000 views on YouTube. So like my channel went from like 150 subscribers, and it's a newer channel that I've only been building on for, I don't know, 8 months or so. But now I'm at like 280, so it's all big.
200,000 views.
Yeah, it's just a reel, like one
Yeah,
reel.
but still, dang, which one
Yeah.
was that?
The one that has the video with the talking heads, your favorite band from the 70s when you were in your prime.
I don't see all your reels, man. Sorry. I do my best, but Liam, what's the working on? Where can they find you? Yeah, we can walk through a deal or your flip soon or something.
Yeah, that
Oh,
should be
yeah.
listed next week. So I'm trying to finish that up. I got to go over there today, see how things are going. But it's supposed to rain all week. We were supposed to do exterior yesterday, but like, of course, the last week we're finishing up. It's raining all week. But interior should be like done today. Appliances got delivered yesterday, so it's coming along. And then probably list next Tuesday. I got the staging, the photos scheduled. So just trying to make a final push on that and get that finished up and sold.
Hey, quickly touch on that then real quick. You're talking about it's raining right now quite a bit in Pittsburgh. Basements have always been somewhat of an issue for a lot of people. And I think he worked with you folks recently, and he kind of went off with Matt Dingus, right?
Mhm.
But he had a reel or clip, I believe, talking about, hey, get into the properties when it's raining and check it out. So is that what you guys or is that, how is that possible? I mean,
It's
is
just it's just a nice plus actually when it's raining, because you can see the deficiencies in some of these basements when you walk them when you've had heavy rain over a couple days, and you can be like, oh yeah, like Matt's real. There's literally a stream of water coming through the wall, and it's
Yeah.
like, okay, yeah, there's an issue that needs addressed here, where you can't really see that if it happened to not be raining. Like people don't like going and walking a whole bunch of properties when it's raining, but it actually is a good thing to do. Or like if it happens to be raining when you're doing the inspection, that's kind of not a bad thing, because you can see these basements if they get wet or not.
How's the weather supposed to look for the next week? Because I have an inspection coming up. Maybe I should rush that thing.
It's rainy. I think Friday is the only day it's not supposed to. So
What do you mean? Next Friday or this Friday?
this Friday.
Oh shit! I better hurry up. Chris Webb says great reel. So I believe maybe he's talking about yours, Joel. Hopefully, but yeah.
Woo, yeah.
Good. Thanks everyone for tuning in. Looks like I may be going live. Oh wait. Oh, hold on. PE Turn RE has a question though. So he's a investor in Washington. He's a new agent also. He's killing it out there. I see him a lot of stuff on social media. So I'll get his YouTube channel in there shortly. Hold on. PE Turn RE. But he says, if it's not raining, could we use a hose during an inspection, Liam? What do you think? What's your thoughts on?
I don't know. Never done it before. I feel like if you come to hose down somebody's property and during the inspection, it's not ideal. But the inspector should be able to get a general sense of things as well. Like they should be running looking at the downspouts and the gutters and things like that, and kind of seeing if there is any signs of water previously being in the basement. Like they can tell. It's just like if it's raining, you'll see the water coming in. So it's kind of a different thing.
Yeah, so there's Curtis's YouTube channel. So go subscribe there. I know looks like he might be doing a weekly content with Jack, also Jack's Business Talk. But go check out Curtis. I was gonna say, what the hell was I gonna wrap things up with?
Hey, Liam, would you want to do a live? Because I've been doing deal of the week. I did one with Jeremy a couple weeks back. Would you want to do a deep dive on your flip?
Yeah, for sure. Once it gets sold. Yeah, we could definitely go through that, show some pictures and everything. And
what I'm saying though is like you in the middle of it not being finished, just talk through the basics before and then maybe after.
Yeah,
we could talk about it off.
Oh, that's a good idea. Yeah, let's do it.
What are you poaching my guests right on my live stream?
We can do it together.
Jesus, man.
He threw you a bone. He said, let's do it together.
Technically you took my idea. I've been doing deal of the week. You took my idea. I expect my royalties.
I
send it in the mail.
I like to promote my guests, so whatever can help them, whether it's get clients or show what they're working on or show a listing they may have. But Chris says, yes, I bought my current home. It was raining and the basement was bone dry. Yeah, dude, I was gonna wrap something up with Vegas. Yeah, Liam will be there, everyone. As of now, Liam, Jeremy, Alex, Deacon, who will be on my channel next week, Wednesday. I'll be with Alex, so talking about Pittsburgh. But they'll be at Vegas, and Joel, I don't know. He's been saying it for 3 years, so
I gotta be there. I'll have the kids though, so I'm gonna have to figure out.
You do know you need to buy a ticket, right, for the event?
Yeah, before it gets sold out, I do.
And just so the keynote speakers is Pace Morby and Jason Hartman, and just today Zuber announced that Rob Built is going to be also speaking. So Rob Built is kind of a short-term rental expert, so he's going to be one of the new speakers also for the event. So if you haven't heard that, definitely go get your tickets now. There it is. Hyder sharing the event ticket. So Joel, you can click on the link right now and directly purchase it.
Get back to it.
But yeah, like I said, it looks like I'll be live streaming Saturday. I'm not sure what time out. But it's going to be with Nick Massey, lead Pray Hodl. We'll probably talk about Bitcoin and whatnot. And I'll be back.
Bitcoin's going to have one more sell-off, one more big sell-off.
Yeah. So I kind of skipped over, but they talked. He said, I think he said October, November is the next surge. I think that's what he was saying.
Oh, I was saying sell-off.
No, yeah, that, and then it's going to have I think even higher put October or something. I don't know, but I kind of skipped over it. But yeah, everyone, thanks for tuning in. If, like I said, if anyone knows how, when I share my screen, to get the volume from that video to be on the screen and not just my headset, because right now I'm trying to figure that out. So I could have shared Joe's viral reel or whatever he had going on. But thanks for tuning in. I'll see everyone Saturday, hopefully. Thanks, Liam.